Hello traders, Doc here. In this video, I will talk about double top and double bottom chart patterns. Thank you to FundedNext for sponsoring this video. Double top and double bottom are my favorite chart patterns because they are very simple and effective. You can use them on any time frame and they are easy to spot. If you like this content, please consider liking and subscribing so I can continue to make more videos like this. With a double top chart pattern, we have this first top formation, then price goes down, it forms this pullback, and then immediately after that it goes up again to test this previous high. Of course, these levels will not be the same every time. Sometimes this second top will be a little lower, a little higher, and sometimes we will have weak rejections here and also here. But the point is to spot this resistance zone that price failed to break here and here. So we have this first top formation, then pullback occurs, then price goes up again to test this previous high. After that, I look for a bearish confirmation and then price goes down. But first it breaks this neckline here. So when a double top occurs, we have one top, we have second top, and we have a neckline. It's important to understand the double top is a reversal chart pattern. Also, double bottom is a reversal chart pattern. We have one bottom formation, then price forms this pullback. It goes down again to test this previous low, maybe forms a weak rejection or some bullish candlestick formation. Then price goes up, breaks this neckline and continues to go up again. Later in this video I will show you some chart examples and how to trade double top and double bottom. Here on this example we can see uptrend here, but then price formed this double top chart pattern. We can see that it formed this first top, went down, and then up again to test this previous high. Bearish pressure occurred and price went down to break this neckline here, and then we can see that price continued to go down. So we can clearly see that price reversed. We have uptrend here and here we have downtrend. This example is very interesting because quickly after that we can see a double bottom. Price formed this first bottom here, formed this pullback, then went down again to test this previous low. We can see this strong bullish candlestick formation and then price went up to break this neckline. After that we can see bullish continuation, so price reversed again. Here we have downtrend, then double bottom occurred, then price reversed and we have uptrend here. So that's why double bottom is also a reversal chart pattern. On this example we have two double top formations. As we can see here we have strong bullish candlesticks, then price formed this high here, pull back, move up and then failed to break this previous high. That's why we have one top and second top. Price went down to break this neckline here, but this time we can also see that price retested this neckline. In my opinion, the best way to trade double top is to wait for a neckline retest. But depending on a situation, you can enter at the second top formation or after a neckline breakout. I always try to wait for a certain confirmation, and that's why I usually wait for price to retest the neckline and then I enter the trade. As we can see here, price continued to go down and then form this pullback. Now, important thing is to understand that double top can also occur in a downtrend. It is a reversal chart pattern, but as you can see here, we have uptrend. It is a reversal chart pattern, but we need a bigger picture. Sometimes double top can occur in a major downtrend. As you can see here, price is going down. But if you focus on this zone, you will see that price formed this bullish move here. So that means that you can trade double top even in a downtrend, but after a strong bullish pullback. And that also goes for a double bottom. It can occur in a major uptrend, but first you need to wait for a pullback and then you can enter a trade after a double bottom formation. That's why it's very important to analyze chart before double top and double bottom occurred. As we can see here, we have major downtrend here, but then bullish pullback occurred. Price formed this high here, then bearish move occurred, and then again bullish move. We can see that price failed to break this previous high and formed strong bearish engulfing candlestick pattern. After that we can see the strong bearish candlestick occurred again, broke this neckline, retested it and continued to go down. In this case you can easily enter after this second top formation. Double top is not fully formed because we want to wait for a neckline breakout and then we can say that we have double top. But in this case we have major downtrend here, and after this pullback here price formed this double top. Also we have this very strong bearish engulfing candlestick pattern, and that's why this was a great opportunity to enter here at this second top formation, not to wait for a neckline breakout or even a retest. We can see here that even retest occurred and that you can also sell here. That's absolutely fine. Put your stop loss above this neckline, enter here and then aim for a good risk reward ratio. But as I said, it's important to analyze your charts properly and spot this major downtrend here. That's why you can be a little aggressive and enter here at this second top formation. Here I explain a little bit more about the entries, and as you can see I mark this second top as aggressive entry. If you have major uptrend and then price forms this first top, then goes down, up again to test this previous high, it is aggressive to expect that price will go down and form double top, because many times we will see price goes down and then goes up again to break this zone. That's why this is aggressive entry, because we don't know if price will go down to break this neckline and form double top. This also works for a double bottom, it's just the opposite. But again, as I mentioned before, if you have a major downtrend and then pullback occurs and then double top, it is perfectly fine to enter here, especially if you have some bearish wick rejections or strong bearish candlestick formation. Like we had in a previous example, we had strong bearish engulfing candlestick pattern, so it was perfectly fine to enter here. Then we have safe entry, and that's when price breaks this neckline. When this happens, it is okay to enter a sell trade, but in this case the best move is to put your stop loss above these previous highs. For some traders, and sometimes this will be too high stop loss, but if it's not too high and it's perfectly fine for your stop loss to put it here, then you can easily enter. But the best entry and the patient entry is to wait for a price to retest this neckline here. In this case we have confirmation of this previous low or this neckline, and if price forms a bearish pressure, weak rejections or bearish candlestick formation, it is perfectly fine and reasonable to enter a sell trade. In this case, you don't have to worry about this previous major uptrend or downtrend. Here we can see example with two double top formations. We have first double top here, and then prices form this massive bearish candlestick to break this neckline and retest this neckline with another double top. This occurs sometimes, and you have very good opportunity to enter here and catch this bearish move if you missed this entry here for some reason, or maybe even this one after a neckline breakout. On this example here, we can see this curved double top formation, and then price formed move down to break this neckline and continue to go down. Then we can see bearish rising wedge, but I'm not going to talk about this pattern here. For now, we just want to focus on a double top. We can also say that price retested this neckline. As you can see, price broke it, and then we can see these two bullish candlesticks that basically retested this neckline here, and price continued to go down. Wherever you decided to enter here, the best possible way to put your stop loss is above this high. Of course, that depends on your style and your risk management. It's maybe too high to put your stop loss here, then you can put it according to your risk, maybe somewhere around the middle between this neckline and top. Of course, everything that I previously mentioned worked for a double bottom too, except this time you want to look for opportunities to buy. So you can look to buy here, which is very risky because we have downtrend and lower highs and lower lows. That's why this is aggressive entry. You can enter here after neckline breakout, which is much better entry point, and also you can wait for a retest of this neckline and then look to enter. In this example here, we can see that retest didn't occur, so sometimes it's better to enter after a neckline breakout. Now let's look at this example of a double top formation. In this case, we have major downtrend because price formed this strong bearish move, but we can also see this support zone here. So price from this lower height broke this previous support and continued to go down. So we have strong downtrend. But then this pullback occurred and price retested this previous support. It retested it here with a double top formation. We have first top here and then second top here. So what we have here in this example, we have retest of a previous support and basically new lower high formation. So price formed a new lower high, retested this previous support and also formed a double top chart pattern. In this case, it's perfectly fine to enter here after this strong bearish engulfing candlestick formation. Again, you can be patient and wait for a breakout and then enter here. Again, put your stop loss above this zone and you can aim for this previous major low or even below depending on your risk reward ratio. Sometimes you can use help of an indicator. In this case, we have stochastic RSI. Here we have uptrend. We have series of higher highs and higher lows, but then price formed this high and failed to break it here. Then stochastic RSI can help us, and this time we have divergence because price formed these higher highs and stochastic RSI formed lower highs. And also here it is providing us with a valid sell signal. So we have divergence here, we have high showings of our stochastic RSI, and also here price failed to break this previous high. Then we can see these strong bearish candlesticks, and this one here broke this neckline, so it was very reasonable to expect a reversal, because not just that we have this double top formation, but we also have this help of our indicator. Of course, every time first you need to focus on a price action, you need to focus on a key levels, and only then you can try to find some help with the indicator. This is a perfect example when we can see that price action and indicator worked perfectly well to give us a sign that price is about to reverse. Here I want to show you a very interesting situation where we have two double tops, but the second top formed within the first one. This doesn't occur very often, but it is very interesting example, and I just wanted to show you how effective this pattern is. Here price formed this first top, then formed the move down, went up again to test this previous high and formed this second top. But if you look closely, you will see that within this second top, price formed another double top. First one here and second one here. We can also see this neckline here that price broke and continued to go down. It went down to break the neckline of this first double top, and again it continued to go down. So what is important that this double top provided us with a valid sell signal twice. Both this major double top and this minor double top worked very well and provided us with a valid sell signals. Don't expect this to happen very often, but I just wanted to show you because it is very interesting example. FundedNext offers different types of challenges that you can complete and become a funded trader. Here you can check all the benefits of these challenges so you can pick the one that works for you the best. Currently I'm I'm doing this stellar challenge 100k, and as you can see I am in profit, and if I manage to pass first and second phase I will become a funded trader. This is a dashboard that you can see all relevant information, your payout, different free competitions, and even news calendar that you can check for all major news. What's great about the FundedNext is the fact that you can split profits even from challenge phase. Also very important for me personally is that there is no time limit for challenge phase, so it will be active for as long as you don't complete it or fail it. Also, FundedNext has guaranteed payouts, and if for some reason they miss this 24 hours mark, they will top your payments with extra $1,000. You can check link in the description of this video and even use coupon code ForexDoc for 10% discount. Good luck, traders! It is also very important to understand that these patterns don't work every time. In this example here we can see strong bullish move and then price form this high here. We can see a bearish move and then bullish move again. At this point we can see a strong bearish wick rejection and two bearish candlestick patterns. So it is reasonable to expect to see a double top formation and that price will continue to go down. So for example, let's say that you decided to enter here after this second top formation, but unfortunately as we can see here, strong bullish move occurred again and price went up. So we can say that our double top pattern failed here. We can see one top and then second top, but price didn't go down, it actually continued to go up. These patterns are very useful, but of course they don't work every time, especially when market is consolidating. Here we can see a consolidation and we don't have uptrend or downtrend, but then price formed this structure that looks like a double top, but unfortunately as we can see here it failed. This is 5-minute time frame and we can see here very strong bullish move. Price formed this high here, then pullback occurred, bullish move again, and price failed to break this previous high. Here we have this bearish engulfing candlestick formation and we can say the double top is about to occur, but as I said before, it is too aggressive to enter here and it is risky because price can just continue to go up as it happened on a previous example. In this example we have major uptrend, so it is very risky to enter here, and this time you want to wait for at least neckline breakout. We can see the price broke this neckline here, but it's not a mistake to even wait for a retest because here, as I said before, we have very strong uptrend. If you look closely you will see that price retested this neckline here and then went down again, but then we can see that bullish move occurred again to retest this neckline once more. So if you missed this entry you can try to enter here, and then finally as you can see price went down and reversed. This is 2-hour time frame where we have this major uptrend, but then pullback occurred and price formed this double bottom chart pattern. As I said before, in a major uptrend you can wait for a pullback and then look to enter after a double bottom formation. That is exactly what happened here, where price formed this pullback and then formed this low here, bullish move and then bearish move again to test this previous low. In this case you can look to enter here at the second bottom formation because previously we have this major uptrend. But if you don't want to do that, it's perfectly fine. You can just wait for a price to break this neckline and continue to go up. But also you can wait for a retest, and as you can see it occurred here. Price broke the neckline, went up, and then strong bearish candlestick formed to retest our neckline. And then again we can see a bullish continuation. So basically all entries worked here. This aggressive entry worked because price continued to go up. This safer entry worked because price continued to go up. And this patient entry worked because price continued to go up here again. That's why double bottom is very powerful, because you can have multiple options to enter and still have a good results. Finally we have 4-hour time frame example, and this is gold. Whatever you decide to trade you will find double top and double bottom chart patterns. Here we have downtrend and then price formed this low. It went up, down again to test this previous low, formed two bullish wick rejections, and then finally went up to break this neckline with this massive bullish candlestick here. After that we can see that price continued to go up. So I just wanted to show you how simple and effective these patterns are and that you can find them on any time frame. I hope this video helped you to understand these patterns better. I think it's very important to include them in your trading strategy, and if this video helped you, please like and subscribe so I can continue to make more. See you in the next video. Bye bye.